and we.
Just 1 second. Yeah, be patient.
All right, we are live. Hey, good morning, America and the world. This is Vinny Chopra. This is Vinney and Beau Show. As you know, we come live every Friday, right there, 9:30. I hope you can subscribe to us, put notifications, and get you informed about the world of really how to get your business to the next level in real estate, in loans. As you know, Beau is a tremendous consultant, a loan broker who is just well known all throughout USA and also in the Bay Area. He just moved to Las Vegas. And then myself, I've been living 40 years right here in San Francisco Bay Area in Black Hawk, Danville. And we come live to you every Friday, 9:30. 9:30 is the new time. And we are also broadcasting actually at 5 different channels: the YouTube channel, the Facebook channels there with the personal page, and also the group, the club we have, multifamily club, and also on LinkedIn at 2 channels. So please, give us your questions, and we will try to bring some very top-notch, guests to you so that you can ask these specialists some really great questions. So, hey, welcome, Beau. How are you, bud?
I'm doing well, and it's good to have a guest on the show for once, so we don't have to do all the talking and we can ask questions.
Yeah, we can make it more meaningful. That's what you're talking about, right?
Yeah.
Man, I think we give value. I hope, people are really. I started this show about 2 years back, and it was the syndication show that a lot of investors can ask me whatever is on their mind. I was teaching them through all that, Beau, and then last year you and I joined hands and made it a bigger show, which will bring lots of great things about personal development to really take our business to the next level, and so that we can talk about real estate, because that's what our life and blood is. We've been doing multifamily myself, and you're doing loans, and tremendous. And I'm so happy to welcome a great guest and a great friend of mine, Ted Lanzaro. And actually, Ted is a certified public accountant, a real estate investor, a real estate broker, also author and speaker with over 29 years of real estate tax consulting and investing experience. That's tremendous, guys. Not 5, 10, 15 years, 29 years of experience. I mean, he has all the answers to your questions. He runs Lanzaro CPA LLC, a boutique. I like the word boutique, guys, because you're not a number. Many times I've talked to so many CPAs in my lifetime, and I find, you become a number, and they only have that little time, and they are able to put you in line with everybody and all that. I like the word boutique CPA firm specializing in accounting and taxation for the real estate industry. That's the other thing I love about Ted, that his knowledge, his demeanor, is all the, the answers and all the different techniques and all the consulting is in the real estate industry. It's hard to get really great CPAs in the real estate industry. For the past 29 years, he has helped thousands of real estate business owners, entrepreneurs, and investors all over the United States implement cutting-edge tax strategies that save them thousands of dollars annually on their taxes. Ted, welcome to the show. We are so pleased to have you, bud.
Thank you, Vinny. I appreciate it. So great to be here.
Oh, thank you.
Thank you. That introduction.
Oh my gosh, it's my pleasure. And I want to thank John Rusin, my partner, and who's just tremendous. He's right in the background and orchestrating everything. Thank you, John, our, just special friend. Let me kind of talk to you about, I know we are going through coronavirus in USA and around the world. And of course, we are trying to get stimulus packets and a lot of things. The CARES Act, is happening. Please tell us more about our listeners, how this can help them and what they can watch out and how we can use some really tax strategies. This is only like March, end of April, first part of April, middle of April. Please, share with us your knowledge,
Okay, yeah, more than happy to do that. So just starting with some really basic information, which is the IRS changed the tax deadline from April 15th for filing your personal return until July 15th. And they also changed the LLC partnership and S corporation deadline from March 16th to June 15th, right? So let's just start with that kind of simple thought process, right? Now, they also, and here's where some opportunities come in, they also changed the estimated tax payments for individuals, the due date from April 15th till July 15th. Now, think about it from this standpoint, right? The way you calculate estimated tax payments for an individual, right, is you do it one of two ways. It's either you make estimated tax payments in order to get your taxes paid in quarterly to avoid having penalties if you owe money at the end. And there's two ways to essentially penalty proof yourself. You either pay in 110% of your prior year tax or 100% of your current year tax.
Correct.
Okay. So if I were to go, say I'm a business owner in this environment where I'm probably going to have lower income this year, pretty likely for a lot of business owners. Well, I certainly don't want to pay the government 110% of my prior year taxes, right? I may be giving up a lot of cash flow that I may need to get me through this, this disaster, essentially, right? So what I'm going to do is I'm going to say to you, look, there's a planning opportunity here. One, from a timing standpoint, okay? We don't have to make the payment until July 15th, but we also only have to pay in based on our actual income from January 1st to May 31st.
Yeah.
Okay. So if I've had a decrease in income, like say starting in March when they shut down businesses, until whenever businesses come back online, right?
Yep.
Well, I don't want to pay in 110%. I'm going to actually calculate my actual income and make my estimated payment based on what that actual income is, what my actual tax is. I'm going to pay in 100% of what I owe. Yeah. So that's where the planning opportunity comes in as far as timing your checks. Now, the other thing you want to keep in mind is that there's some stimulus payments available to people who earn under $150,000 a year married filing joint. And if you're single or head of household, there's some different, it's 75, under 75 single, under 112 head of household. In those scenarios, you can actually get either a $1,200 stimulus check for single and head of household, or a $2,400 check for filing if you file jointly, right? But it's based on either your 2018 tax return that you filed or your 2019 if you've already filed. Now, let's say, for example, you were over in 2018 and under the limit in 2019. Well, then you want to get your return filed, your 2019 return filed as soon as possible so that they can base the payment on your 2019 return, because you may not qualify for 2018, but you might for 2019. You have to look at that. The other thing the IRS is doing is they've sped up refunds. So if you're due a refund, you can get your refund within 21 days, filing electronically. So that's what I've been doing to help people a lot. In a lot of cases, is people that were due back refunds. Maybe they're out of work. They need the. Well, let's get your return filed. One, you're going to get your refund. Two, if you qualify, you're going to get your stimulus. That's going to put money back into people's pockets and help them during this crisis.
Marvelous. Beau, you have some questions, but yeah.
Oh yeah, I got a lot of questions. Can you kind of break down like the difference between somebody? Let's say somebody has a few rental properties, and then and then they have a W-2 job, say, or they work in sales for a tech company, versus somebody who's deemed a real estate professional, which is, I think, 750. They work at least 750 hours a year in that business. What's the difference? What deductions more do you have as a real estate professional? Can you kind of explain that?
Sure. So we look at individual people's situation, and if you're a W-2 employee and you earn between you and your spouse, if your income is over $150,000 a year and you don't qualify as a real estate professional, then you're not eligible to deduct your rental losses against your ordinary income. And typically, the rental losses are produced by the depreciation on the property. So everybody knows that you want to invest in real estate because you can get tax-free cash flow. You make money on the property, hopefully, and then the depreciation, the rational allocation of the cost of the property allocated over 27 and a half years for residential, 39 years for commercial, offsets that cash flow, and you end up with either a break even or a taxable loss, but you still have money in your pocket. That's the good thing, right? Now, if I can't qualify as a real estate professional, I can't take that rental loss against my ordinary income. So it carries over for until the next year, and continues to carry over until one of three things happens. One, my income falls below $150,000 a year, and I'm eligible to take some of it. Or my properties will eventually turn and start producing taxable income, even with depreciation, because my mortgage interest is down. I've taken a lot of the depreciation already. So now I can start using my carryovers to offset my earned income the year that it occurs, right? Maybe it's a few years down the road. Or when I sell the property, whatever carried over losses I've had, I can then deduct in the year I sell the property. Now, that's completely different than a real estate professional. So if you're a real estate professional and you qualify, so you've worked more than 750 hours in a real estate trade or business, and it's more than half of what you do time-wise, okay, then you're eligible to deduct your rental losses against your ordinary income. And a good example is a client of mine who is a real estate broker who made about $600,000 in net commissions after expenses this year. But he also bought an apartment building, and we did a cost segregation study on it, and he ended up with like a $300,000 loss on the net loss from the depreciation on the property. He took the bonus depreciation. Now he was eligible to take that entire loss against his net earned commission income. So he made 600 as a real estate broker minus 300 from the loss on his rental properties means he only paid taxes on $300,000 this year.
Can I just stop you right there? Because I have so let's take a guy like Vinney, for example. He's got a lot of investors that are not real estate professionals. And the ones that start, consistently lending, as a limited partner in these projects, over time, they could probably be deemed, because if they start spending enough time in this, I just think it makes sense, like for like a married couple, for somebody, even if one person's got a day job, the other person gets into the real estate business and has like a holding company, a management company, where they can show that they spend 750 hours a year in the business, because it would dramatically offset their earned income, correct?
Yeah, and that's Beau, that's a great point, because look, in a lot of situations, you have high income professionals who are investing in these things, and then their spouses may or may not be part of the real estate industry, and they can actually go and do real estate, start a real estate related trade or business. It could be real estate agent, real estate property management. I have clients that are doing where the spouse is like a rehabber, and they're just, or you could have a portfolio that you manage, your own portfolio aside from the syndicated investments, right? So all of those things would qualify you. And then, so what I do in a lot of cases is I meet with people and we talk about how can I qualify, either myself or my spouse is a real estate professional,
Mhm.
and then we go through their individual situation, because it's not a one size fits all thing. We've got to take into account, what do they actually like if they own properties, right? Then that's a great place to start. Hey, let's get one of you doing the properties. Um,
So
so
can I interrupt you again? So let's just say we have like Vinny has somebody who's active in almost every syndication as a limited partner. I mean, I know there's a lot of rules of thumb here, but if I mean how they can actually as a limited partner, not a general partner, they can still be deemed a real estate professional. I mean, if they can document that they're spending enough time, like looking at the offering memorandums, flying to the properties and doing and studying it. I mean, did you ever see people doing stuff like that?
Isn't there like a limitation that 750 hours have to be more than their regular job, or 51% rule, right, Ted?
right, so
Yeah.
they have to be doing so. One, um, just investing as limited partner in syndications doesn't necessarily qualify you, no matter how many you're in, because you're still a passive investor in that. Now, the other thing that Vinny just mentioned, which I kind of hit on before, was it's got to be more than 50% of everything you do. So if you have a W-2 job where you're working 2,000 hours a year, you've got to have 2001 real estate hours.
Yeah.
And part of the issue that you have, okay, is that you want to try to qualify in a real trade or business, right? So for my clients, I want to see my clients, and this is how I counsel them when we go through and we set this stuff up, right? Where I want to see you have your own investing business, or your own syndication business, or your own real estate brokerage, property management, your own properties. Just investing in syndications, at least in my opinion, is not enough to get you over that hump, even if you can make it over the 750 plus 50% rules.
Sure. And you know what you're saying also, Bo, maybe you are implying, and a lot of our investors, Ted, are doctors, attorneys, business IT professionals, directors. But if their spouse, right, is not working in another position, and if she or he, it could be either way,
Right.
uh, can log in and get involved in the whole year, 750 hours, which is like, few hours during the week, of course, taking care of other, things they do, not as a job, but also with the weekend time counts too, right? Because real estate is a 24-hour job, right? You could do any time.
Yeah.
Yeah, and that's that. So let's just use the busy doctor and the spouse.
Yeah.
No matter, I always use he, and then I get accused of being sexist, right?
Yeah.
So let's say busy doctor and spouse. So now the spouse, let's say the spouse stays at home, right? We want to qualify the spouse as a real estate professional. Let's assume they don't have a portfolio of other properties, right?
Yes.
The easiest way to do that is, okay, you know what? Let's go out and get yourself a real estate license. Get out there and start brokering real estate. And I only want we're going to keep time. We're going to keep track. It's got to be legit. I want you to be legit. And it would be great if you actually made some money, right? So even if you just made one sale during the year,
Yeah.
that would be awesome. And then I teach the people how to prepare the log, to document the hours, and all of the things that count, and then we go from there. And I think that's probably, especially when you're talking about big deductions,
Yeah.
right? So this doctor, let's say he put $500,000 into one of your syndications, he might get first year, he might get a $300,000 depreciation deduction in year one, right? So
Ted,
now if he's going to take
oh
that,
my gosh, can I stop you right there? We
go ahead.
just sent the K1s out yesterday, and it totally happened, Ted. We just purchased the property in December of last year, the Princeton Park, with my partners, and we just gave our limited partners K1. It was 319,000 minus. Aha. 500,000 they invested on December 10th, and now they got a K1 of minus 300. $15,000 or $14,000. Now that's a passive loss, right?
Right.
Yeah.
So now I actually work with one of your Princeton Park people,
Yes.
right? I won't say who,
No.
right? But I actually work with them, and we're doing that exact thing, trying to qualify their spouse as a real estate professional, and we're going through all of the different, showing them how to do the logs, what activities count, what activities don't count. We've had a number of discussions this week about that very subject, right? And so, and this is a person who is actually making money, has a legit real estate business, and is making money. So those are the things that we're talking about, because when you're trying to justify, in the unlikely scenario that you were to be called into the IRS's office to be questioned about this, one, you would want to have a log. Two, you'd want to be able to show that you're running a legitimate real estate trade or business where you make money, right?
Yeah. So true, so true. And you can not make money for maybe 2-3 years. Is that how the business is? I know I used to, in the old school of thought was you got to make profit at least after third year. Is there any stipulation like that? I
Well,
don't.
not really. What I'm talking about is just gross revenue. I like to see my real estate professionals generating some sort of gross revenue,
Yeah.
even if they're losing money overall.
Mhm.
I'd like to, because I consider that, and I think the IRS would share my view on this. I consider, a legitimate real estate trader business is one that actually generates some revenue. You don't have to generate net, but I want to see some gross.
Totally, totally. Thank you. And also that these are active or passive. Let's see, when active is when you are very active in the deal and you are making these losses, then they can definitely combine active and passive incomes together, right? But otherwise, you can be batting this minus whatever this 315,000, even if you are not a real estate professional and you have some passive income coming from other opportunities, it can all be mixed together when we file, or how does it work?
Yes, you can offset passive losses from real estate against passive income
Yeah.
from other sources, passive income from real estate. But it's got to be passive to passive. And I think the big mistake I see people making is they consider interest and dividends passive, and it's not. Interest and dividends are actually
Thank you.
portfolio income.
Thank you. Yeah.
Yeah, that's what gets kind of challenging is when you start acquiring a lot of rental properties. Is like I have a lot of private investors, then I have to I have to send them a 1098. Wait, I send them a 1098 interest statement,
Mhm.
right? And so, but do you know if it's an IRA, do I have to prepare a statement if I'm paying? If they're the lender on a deal for me, do I? Is there any exemptions, or do I have to?
Hmm.
Do you know?
I don't know the answer to that question. You're saying, do you have to send a 1098 to a private lender who's an IRA?
Yeah.
That's a tough one. I have to be honest, I don't know the answer to that one.
That's a good point. I know in our case, and maybe we are doing it, I hope we are doing it correctly. Our CPA has been sending even the IRA K1s to the owners. So we don't send it to like Pensco or Equity Trust or like that, but we send it and mail it, their K1 to them. Well, we don't mail it anymore. We just put it on the website, IMS or Update Capital. We use both of them so that it's protected, K1 with their information, and we upload it. They can download from there. But I don't think we ever send it to the custodians, which we call it, right? IRA custodian, self-directed IRA, and all that. Right?
Yeah.
I have another question now. I know a lot of people give hard money loans, right? They have the money, Ted, like in their IRA or like that. They cannot invest it themselves, the arm's length, right? So what's that rule? You cannot invest into like with your blood relations. Is that right?
With a self-directed IRA, yeah, you've got to be very careful about the rules and who. So what I tell people is, look, just keep it arm's length,
Mhm.
right? So if you want to do hard money loans from your IRA, don't do it with your immediate family. Don't do it for yourself. Don't do it for your LLC. There's a whole series of pretty serious rules that go with that, And like, for example, even if you do invest in your own properties, like say I have clients who buy rental properties and flips in their own inside their IRA, right?
Yeah.
Well, they're not doing hard money loans. They're buying their own properties. You can't work on your own properties. You can't be the real estate agent on your own properties, right? You're not really even supposed to be managing your own properties to some extent. You should have some outside management. So as far as hard money goes, one of the tricks that people use, right, is they find like somebody on the outside who's doing something similar to them, and then they loan. So they may each have their own IRAs, right? So instead of loaning themselves money, right, which they can't do, they loan their buddy money, and their buddy loans them money.
Yeah.
And if you use the same rates and the same amounts, typically, right, then that's one way of you're still arm's length, right, and you're following the rules at that point.
Excellent. Boy, you have tremendous knowledge, Ted. I'm so happy. Hey guys, please look at the bottom. You could definitely reach Ted right there, as it says to reach us. John and I learned to 4747447 for lending questions. Text the number that you just see, and to reach Ted, you could just email Ted just a bundle of information, and we've been so proud to know him, and he's been on my show in master coaching. John, you want to come on, buddy? I want to feature John also. John, thank you. Join us here, buddy. Yeah, it's so great to have you join. And any chat, anything people are asking us questions, also please subscribe to our channel, guys. This show is for you. And Beau and I put together great information in front of you, and I've done 28 syndications. My first apartment I bought was 14 units in the crash of 2007 and 8. 14 units for $180,000. Literally, that's my start, humble beginnings. And now we have bought 4,100 units, 4,100, 28 syndications, and covering over $350 million. You can see that 180,000 to 350 million. This is the time to really get into it. I'm telling you. I mean, if I had not taken the steps about 12 years back, I wouldn't be sitting in this chair or in this beautiful house and the lifestyle and everything. So you can all scale up. Please subscribe to our channel below. Look at, comment, give us ideas what we would like to, bring as guests also. And if you know of somebody who would like to come on our show, please send us an email. We would love to talk to them and see where we can go. So we got a lineup of great guests coming right here for you. So John, any question, buddy? Any questions?
I have a question.
Yeah, go ahead.
On a I don't know if you'll know this. It's a tough question.
Hey, no question here.
On a Series LLC.
Yes.
Are you familiar with Series LLCs, Ted?
Series LLC.
Yes.
We had a SEC attorney actually on, Nick. We'll bring Nick on show also just a couple of days back, Beau, and yeah, Series LLC. Go ahead.
If they're setting up a different cell for each property. Do they have to file a separate tax return, or it could be all under the one series? That's a question somebody wants answered, but I don't know if you know it off of hand. But
okay.
It all depends on the ownership, right? So who owns the Series LLC, right? And who owns the sub LLCs? You see what I'm saying?
Yes. If it was the same ownership, just a different cell, then probably only one tax return, right?
Right, exactly. Let's say you and I, Beau, own like a sort of a master LLC that then has a whole bunch of sub LLCs under it, right?
Mm-hmm.
That's one tax return because there's a whole bunch, because the master LLC owns all of the sub LLCs. Does that make sense?
Yeah. Mm-hmm.
Surely. And also in this Series LLCs, from what I understand, like, because I've been doing specific offerings, we call it, right? So there are different set of investors in each of the LLC, even though it's a series LLC. But is the liability?
That would make a big difference. So yeah, okay. So I'm going to scrap my first answer, right? Because that would make if I've got different investors. So in my scenario, I was saying that my master LLC owns all of the subs. If I've got different ownership in each one of the separate entities, even though it's a series LLC, it's a separate tax return because I've got different partners in different entities. Absolutely.
Totally.
Where's Ted from? Where are you from, Ted?
Oh,
My office is in Cheshire, Connecticut.
Connecticut. Yes, I mean, it's so fabulous that we are able to discover Ted, and he's been, he's his own podcast show also. He's written the book also. Ted, I don't know if you have the book, buddy. I should have asked you to see if you would like to. And again, I mean, we want to, promote our guests. They are top-notch guests. And I think it's all our world is, if I may say, it's like building everybody and giving the value. If we give value out, so much value comes in. And that's the real mantra, of any good business. And I think that's what I'd like to suggest to everybody listening to us, give us feedback and utilize lots of things that you learn and implement them in your business, because we want to take your business to the next level. I've been a motivational speaker all my life, and we're going to be starting several channels. I know I just had paid 47, investors last night on my webinar, and we are just getting so much feedback from them. Hopefully we'll increase it to hundreds of people, and then thousands, and then millions, because we can make a big difference altogether. Ted, any more things? You can think some common questions. John, you might have a question, Bert, for our guest.
Oh, Ted, what are you excited about right now? So not so serious of a question. What has you excited about the next 3 months?
How are you keeping with the COVID-19?
Yeah, well, you know what? Look, I mean, I think in any crisis like this, one of the things that I'm excited about is for it to be over, frankly, right? Let's all get back to work.
Yeah.
But I think a lot of what I'm seeing is people that are really reaching out and helping other people, doing their part. I mean, my part has been basically consulting with businesses, helping them get their refunds, helping them apply for loans. So I'm fortunate that I'm busy. Some people are, some people aren't, but hopefully, I'm really excited about the opportunities that are going to exist when we come out of this. And I think there's going to be opportunities for real estate investing, just about everything. I think we may suffer a little bit, but we're going to come back big.
I'm so glad you said that, Ted. I mean, I totally believe that. As a matter of fact, if I may say, from my side, I mean, I've always had office at home. 44 years I've been here in this country. But the big thing is, now is the time to really utilize this time. We are closer to our family. We are closer to our spouse. We are able to do so many great things and take care of our body and our mind. I really believe that God has given us these 3 months for a purpose. And we will never get this time again. Hopefully we won't have this kind of, dilemma and everything where we have to stay compulsory at our homes. But this world is remote. It's so wonderful that we are able to meet across any stretch of the nation. If they have a Wi-Fi, we can meet right in their living room, our living room. It's almost like we have traveled thousands of miles to get there, and I think by, utilizing this time to really hone in our skills, and if we were trying to reach our prospects and investors or people, they are there. I mean, we don't have to go through a gatekeeper. We don't have a secretary outside the door saying, okay, Mr. So-and-so cannot be allowed because he's busy. Well, so this is the perfect time to take our business to the next level. Don't you think? Yeah. Yeah. Beau, what do you think, buddy? Your business has really gone up Ours is too. I mean, I'm so fortunate to mention that we have collected 90% collections April. 90%. I know people were saying that it's going to fall apart. They might be. I mean, please don't take it in the wrong way. I think with communication, with a lot of things happening, our properties, the B class and B plus class are doing extremely well, holding on, and hopefully it will be same as May and June, and we'll come out of it. The forbearance, our local banks have given me forbearance for 90 days in Texas for my C plus properties, which is amazing. The biggest thing is to really be in touch with our management and with the residents, they are gold, and then investors who are gold. So we just gave our Q1 cash flows for Princeton Park and Bentley, and we are getting so many thankful emails because a lot of people thought that we might keep the money, for the rainy day. And so those things are there, right? And I'll just open up the, platform. Bo, what do you think, bud? How is your business coming along?
It's yeah, no, so just to touch on, based on all the investors I know, that's what it looks like. That it's, you read the articles and they're saying 30% delinquency, but it really looks like there's probably like a 7 to 10% delinquency as opposed to a 30% delinquency right now. Now, May, that's going to be the
Yeah.
question.
Yeah.
That's the big question. But so the news kind of scares everybody worse than I think people need to be scared. And then it creates this where people can really pay, and then they say, well, I got to hold on to my money
Yeah.
and so that just creates, just like in 2008, people walked away from their houses because their neighbors were, right? That's kind of like what's, I believe, is happening. I mean, we have a huge amount of job loss. But what did scare me was that how even a lot of these large companies out there don't have any reserves, and immediately they're not. I mean, our society, people don't have a month reserve to like if something. So that's what really scared me.
Yeah.
That's what really kind of positioned my mind how I need to go forward. I need to have 6 months reserves for every rental I have in an account. I
Mhm.
need to have 6 months of living reserves personally,
Yeah.
and then whatever happens, you're protected and you're not going to run into situations. The problem is everybody lives paycheck to paycheck, even if they're making six figures in California or New York. Um, Even if they're making high six figures, they're still living paycheck to paycheck. So people really got to kind of go back to the basics. Even like this, I started like I went the last month without eating out. It saved me like $3,000. I mean,
3,000, man. You go to fancy restaurants, no?
but now I enjoy eating at home. So this has taught me, one, it's taught me that I can connect actually better by using technology now than I could in person,
Yeah.
and using Zoom and things like that, and then we can connect with people in Connecticut, and we can pick their brain about tax strategy, right? And we can do this for people that are, there's probably people listening in a couple different states, right?
Yeah.
So we're able to bring this stuff to people that would have never seen it before, because
Sure.
now people are at home and they have the time, they see the Vinney and Beau Show, and they can plug in and watch, right? So I think it's actually, I mean, we don't want what's going on to be going on, but we have to make the best of the situation. And I'm personally taking this time to make it the best I can. So, Dan Sullivan, I just posted something. Dan Sullivan had a great comment, and he's basically said, "Now's the time you got to be planning for the 100 days when we get out of quarantine, right? And
Yes.
we go out and hit the streets again. That should be the best 100 days of your business, right? Like
So
right now we're gearing up to that, and it's so true. Like there's, we got to be moving forward, and it's great to have Ted here because there's so many people have questions on tax,
yes.
and a lot of our viewers are obviously real estate investors, and
Totally.
I know you could probably, there's a lot of questions on S corps, C corps. What do I want to put my buy and hold rentals in? Do I want to
Mhm.
have a C corporation as a holding company? What are the entity structures that make the most sense for flipping properties versus renting properties? I get those questions all the time, and CPAs and different sometimes have different ideas in their mind because there's not like one set right way, I think, but I think it's interesting to hear. Would be interesting to hear your feedback on something like that, Ted.
Yeah, I mean, look, I think what you said makes a lot of sense, which is one, I think some CPAs do things differently than others, but I think in a lot of cases, that's because every client is different.
Yeah.
So what works for one client doesn't necessarily work for others. And I always tell people, and John and Vinney are probably getting tired of hearing this because we've been talking a few times, but my entire business is about tailoring tax strategies to people's individual needs and situation, because everybody's different, and what works awesome for one person, doesn't work at all for somebody else, depending on, again, we were talking about real estate professionals and non-real estate professionals before. That makes a big difference. So, it all depends. I'll just give you one really quick example. Let's say, so for me, I rehab houses, right? Just as an example. So a lot of, if all you do is rehab houses and it's your primary trade or business, right? Then I actually like S corporations for rehabbing houses. Why? Saves you on the self-employment tax, right? But now here I am. I've been rehabbing houses for 20 years, but I have a primary business, right? And so my salary for my primary business is well over the Social Security level, right? Okay. So now I can use whatever I want. I can use an LLC, and it doesn't really matter because the savings opportunity that an S corp provides isn't something that I need, right?
Yeah.
So what I do is I use it because I can put away more money in my retirement plan using the LLC because of the way my salary is, and it all depends on. So it's just a tailoring kind of thing. What works best for you might not be the best thing for Vinney, and a completely different set of scenario for John, say. And we've got 3 different tax strategies for 3 different people, but we're saving them all money. And the idea is, how do we max out each one of you using the strategies that are available, even if they're not the same for all of you?
So
Yeah, that's a great answer you delivered.
No,
I'm gonna call you because I need to call you. But go ahead, Vinny.
I know lots of other people will be calling, and I highly recommend, guys. We have known Ted now for a few months, maybe close to 7-8 months, and he's been tremendous in our senior living. That we are doing from ground up to all the way. Tax strategies. I think that's the real key. Many times people feel like I will get to the CPA on January 2nd or 3rd, because I want to get this taxation done by April. That's a wrong strategy totally. We need to be actually working with Ted and people like him in boutique CPA firms where it's the whole year. I mean, getting beforehand the strategies through the 2020, let's say right now, 421 tax return. Isn't that right? Yeah.
Yeah, I mean, that's what I'm doing. While I'm doing people's tax returns, I'm also doing to some extent planning for them for 2020, right? And we're talking about, and I always tell my clients, I need to know when you're buying a property, selling a property, before you renovate a property, okay? Because I've got an extensive background in renovations, and there's strategies for that. And before year end, we talk. Now, this year, like we mentioned very early in the broadcast, this year we're going to be talking in the middle of the year. Why? Because I want my clients keeping their money in their pockets and not making excess estimated payments in July, right? Why should they cover 110% of their prior year's income when they could possibly owe substantially less based on what they made in January through May, right? And then this thing is over. We go back to work. Maybe we're killing it the rest of the year. Okay, we can make up for that. We'll pay that when it's due, based on when we receive it, not some artificial methodology that basically loans the government money. We want the government to be loaning us money at this point.
Totally. Wow. Ted, thank you so much. I really appreciate your taking the time to join us, and we would love to invite you back if you're available. I know you're very busy, and it's such a pleasure to have you. And yeah, hearts out to you. Thank you so much. Thank you.
Thank
And
you, Vinny, Beau, John. Thank you all, guys. It was my pleasure being here. Appreciate it
thank
very
you
much.
so much. Thank you. All righty. Wonderful. Bo, do you have any other things, buddy? We are about almost 45 minutes into it, guys. Please do like us, subscribe to us, give us comments, and share. Share this knowledge because you will move mountains. You'll help all your clients. If I were you, actually, I'm planning already. I'm going to take the recording of this one link and send it out to my investors and send it out to my contacts because I want them to see how great information can help their business, and their profession, and how they can qualify for being a real estate professional or their spouse or better half and things like that. See, they have to be married. Is that right, Ted? I was just going to say that for them to be having the professional, uh, real estate professional, they have to be married or
Domestic partners.
legal partners, right?
Yeah, you have to be able to file jointly, married filing jointly.
Oh, file joint. Okay, yeah.
As long as you can file jointly.
Okay, as long as you can file jointly. Wonderful, wonderful. Any other things that you might like to add, Ted, before we finish up the broadcast today?
Yeah, what's your final recommendation, Ted, that you would recommend to all the listeners?
One of my final recommendations would be to go to my website at www.lanzarocpa.com, and you can get a free copy of The Tax Smart Landlord, which is my book of 39 tax strategies that, unfortunately, since I'm home today, I don't have a copy of it in front of me that I can go like this and hold up. But you can go and get a free digital copy. If you email me, my assistant will mail you a physical copy also for free. That's not a problem. And, I would just say, look, I mean, better times are coming, hang in there, take advantage of the programs that are available, and that's what they're there for. And then when we get to the other side of this, like Beau was saying, I think we're going to have a really good 100 days. I think that makes a lot of sense.
We will. And lots of great opportunities will come, guys. I know I've been through some ups and downs in America, being from India and all, and I know 2007, great opportunities came. The good part is that this is like a V. I was thinking it was a V, like coming in and then going out quickly, but it's going to be like a swoosh. So like going down like a Nike symbol. So it's going to be not like a U. Beau, you and I talked about that. But the big thing is you've got to have opportunities will come in your lap, but you've got to have the money and the investors and things like that and all the things ready to really grab those real estate, opportunities in, of course, 4-plex, 6-plex, 12-plex, 50-plex or 100 units like that. And, if you want to really, really get some good knowledge, Vinny is always there. My top international top seller, Apartment Syndication Made Easy by Vinny Smile. I smile a lot. And it's in Kindle edition, just so cheap. And then also paperback, Spanish edition is out now, and audio. So please go ahead. And if you like and you think that I have made a difference, please give us some 5-star reviews. We got 137. I mean, this book just came out last year. We got 67 positive reviews in 1.5 months, actually. And then, and thank you so much. Thank you. And again, I want to really thank Beau, my partner, my co-host. And Beau has been just tremendous loan broker. I mean, I just love, I've known Beau for 3 years now, 3-4 years. We met at a conference in San Francisco here, and we are just buddies. And actually, he presented me to buy, and we bought this beautiful place. And not only that, Beau got me 8.5. I'll never forget that, Beau, till I die. $8.5 million loan closed in 15 days. Guys, 15 days. It's the best of the best. They did all the studies, environmental, everything, home inspections. They flew to the multifamily and everything, and we closed it within 15 days. And I was in Japan with the family. My attorney had the power of attorney and we closed it. So anything else on you guys' mind? We can wrap it up.
No, you're just in a good mood today. I mean, you're always in a good mood. Today, you're in a really good mood. You you must have yeah, you must have well, it's just your 40th anniversary, right? So
I know. We just had last week 40th wedding anniversary. It's just so exciting. Kanchan is cooking great food. We are planning lunches and dinners, and of course, we eat oatmeal in the morning with the almonds and the raisins and the blueberries, all the good stuff. I'm losing weight, which is excellent. I mean, I was like 189 to 184 to 181, now 176 this morning. I measured. So, I'm just feeling good. And, that is something too. If you're thinking about losing weight, guys, I'm not doing anything different, but I'm doing miracle morning in the morning, getting on my elliptical, listening to some positive thoughts, meeting with some clients while I'm on my elliptical. Usually, John and I are there with 7 o'clock and 8 o'clock. I'm getting up at 5 o'clock every morning and, going to bed at 11:30 or so, like that. So it's like, you can make it happen. And we are finishing up my positivity book. We are starting new shows like Let's Spoil the Seniors. That's our new show. We are coming out with our senior living ground up. We are getting hospitality going. I've been getting more involved in the management of the hospitality. The Hilton Hotel we bought, $6 million. We still have occupancy. We're going to break even. And not only that, it's appraised 8.7 million. 8.7 million. Of course, as we get back to our NOI and everything, it's going to be worth even more. We are ready to buy some hotels, guys. We have millions of dollars, by the way, my partners and I. So please, if anybody's got a great lead on a great name brand hotel, we are ready for it. And multifamily. We have millions of dollars also to buy and close real quickly on the multifamily also. Bo, anything else you want to add, buddy?
no. I gotta start eating Wheaties though. 'Cause, whatever whatever you're eating, your curry or whatever your wife's cooking for you, something. You got a lot of energy lately. At your age, that's crazy, but that's good. I like your energy.
67 to have that energy. I love it. I'll be 68 August 27, and I just have so good clear picture in my mind about next 10 years. And that's what it does for you. When you have more time to think and plan and look at where you are and where you want to go, the doors open for you. And I really believe that the mindset, how we can, take our business 2 times, 3 times, 4 times, 10 times. It's all how we plan and think and strategize, and don't just leave anything to chance. I mean, we can make the things happen. And I'm starting a new show on the mentorship also with positivity through adversity show. So that's going to be another one. Then maybe John and I will be broadcasting on Monday morning to get everybody psyched up about the week. So that's the new show, John. You didn't know about that. I've been thinking about it. So we're going to do that positivity through adversity, or we'll change that name after COVID-19 to positivity in life or things like that. So I'm just excited. The vision board, pictures in the vision board should change. The pictures should change. We are never constant. We need to be always driving for bigger growth and bigger positive things and bigger. Boy, you are excited. What's that? What's happening?
I am. You're amping me up, and I'm thinking about poor John, about all his new jobs he has to do now.
I love it.
Yeah.
Just to say to those people, we're going to be promoting our new company also, branding for 2030, Monil Branding for 2030, which is our partners in Pune, India. And we are working on these tremendous marketing techniques. We are doing it in our business that we can do the whole duplication of the whole process of click funnels and everything and the emails and all that. which people charge like 20,000, 30,000, 40,000 even. Somebody quoted me the other day, we'll be able to provide to the masses at such reasonable price that you can't beat it. So guys, anybody listening to us, if you're interested in building your brand, building your hospitality, we just talked about it. And then the senior living, Monil Senior Living, Monil Investments, Monil Management, Monil Branding, and Monil Oxygen is the other one, which we're kind of laying flat a little bit. And then, of course, it's not my company, but a new company we started with my partner in cloud defense. It's in stealth mode, unicorn right now, which is going to be totally amazing how we are going to be putting this great enterprise software, with big companies like Microsoft, Google, all the big ones. Vinny's on a roll here.
And if you have any questions, just email John at vinnychopra.com. JON@vinnychopra.com. And he'll handle all the shit for you.
No, thank you. Thank you, Ted. We really appreciate
Thank you, Vinny. Thank you, guys.
Thanks a
Yeah.
lot. Thank you. All right.
Thank you, John. Thank you, buddy.
You're welcome, guys. Have a great day.
Okay. See you
Thank
guys.
you, guys. Bye-bye.
That was fun.
Let's end the broadcast.